All right, we need to talk. This is an urgent warning for anyone invested in the Nigerian banking sector. If you are holding any Nigerian bank stocks, you need to listen very, very closely to what we're about to lay out.
You see, right now, everyone is cheering the Nigerian banking rally. Retail investors are jumping in, they're buying up shares, thinking they're about to get these massive dividend checks from what look like record profits. Here's the thing, they are walking straight into a trap.
So where is all this coming from? Well, it all goes back to the Central Bank of Nigeria's huge recapitalization order back in March 2024. The whole idea was to make the banks bigger, stronger, strong enough to back a trillion-dollar economy. The final deadline is March 31st, 2026, and it has kicked off an absolutely frantic sector-wide race for cash. But this whole situation has created a really dangerous dynamic, where the stock market rally you're seeing for a lot of these banks, well, it's a rally built on sand. I mean, just look at the sheer scale of what's required here. For a bank with an international license, the minimum capital they have to hold jumped from 25 billion naira to 500 billion naira. That is not a small increase. That's a tenfold leap. It's designed to completely reset the game.
And this whole recapitalization exercise has basically split the banking sector in two. On one side, you've got the leaders, right? The big Tier 1 banks, your Access, your Zenith, GT Bank, who've already met this new threshold. But on the other side, you've got a whole bunch of mid-tier and smaller banks who are seriously struggling, basically relying on a temporary pass from the regulator just to stay in business.
This pressure is what we're calling the recapitalization squeeze. And trust me, the laggard banks are the ones getting crushed.
Now, to really get this, you have to understand this one key term: regulatory forbearance. Think of it like a get-out-of-jail-free card that the central bank gave to certain banks. It let them bend the rules on things like risky loans. It was a lifeline, but guess what? That lifeline is being cut.
And here is the absolute crucial point. The CBN didn't just end the grace period. No, they deployed a stealth weapon against these weaker banks, a move that we've seen most retail investors completely miss.
And there it is, the smoking gun. The central bank put out a directive, and let's be clear, this is not a suggestion, it is a legal order. Any bank still using that regulatory forbearance lifeline is now legally banned from paying out dividends. Full stop.
And the mandate is even tougher than it sounds. For these undercapitalized banks, it means zero dividends for you, the shareholder. It means zero bonuses for their own directors and top execs, and it means a complete freeze on any new investments overseas. The CBN is literally forcing them to hoard every single naira they can get their hands on just to survive. Okay, so at this point, you might be scratching your head and thinking, wait a minute, what about all those record profits they've been reporting? And that is the second, and frankly, the more dangerous part of this trap. This is the exact question that should be on every investor's mind. How on earth can these banks be under so much pressure if their profit and loss statements look so amazing? It feels like a total contradiction, but believe me, it is not. The answer is simple. A huge chunk of those so-called profits isn't real cash, it's an accounting illusion. It was created by the massive devaluation of the Nigerian naira. As the naira's value tanked, banks just revalued their dollar assets on paper, and voila, huge FX revaluation gains. Just look at the scale of these paper gains. We're talking nearly 2 trillion naira in non-cash gains just from currency moves, plus another 400 billion from revaluing assets. These are mind-boggling numbers, but it's not money they can actually spend or give to you. It's not real. This analogy from a former bank worker just puts it perfectly. Imagine you're holding $1,000 and the naira devalues. On paper, the naira value of your dollars shoots up, but have you actually earned anything? No, you still just have $1,000. Until you sell, it's not real money. And this is what connects everything together. The central bank knows these profits aren't real cash. They are not fooled by accounting tricks. And that is precisely why they banned the weaker banks from paying out any dividends. They're stopping them from paying out phantom profits and draining the real capital they so desperately need to survive. So, we've exposed the trap, a hidden dividend ban on weak banks, all masked by these illusory profits. Now, let's talk about your survival strategy. So, how do you, as an investor, navigate this absolute minefield and protect your hard-earned capital from what is about to happen? Look, it's a simple 3-step process. First, verify. Is the bank stock you own fully capitalized? Has it been officially confirmed by the CBN? Step 2, accept. If the answer is no, you have to accept the reality that your expected dividend check is going to be zero. And third, you have to act. Rotate your capital out of these restricted banks and into the verified, compliant ones. Now.
And don't just take our word for it. This is exactly how the market is going to react. When those Q1 2026 results come out, the compliant, strong banks will pay out fat dividends, and their stocks are going to get a positive re-rating. The restricted, laggard banks, they will declare zero dividends, and the market is going to absolutely hammer their share price. It's inevitable. So the takeaway here is brutally simple. In this market, capital is king. You either follow the capital and move into the strong, compliant banks, or you stay put and become the exit liquidity for the smart money that is already heading for the door. The choice is yours.